Fenton.
Witten.
How are you, mate? I'm on the rosé today.
Mate, I was on the rosé last week. Look at that.
You were. You inspired me.
We're memeing.
But mostly because I can keep rosé for like weeks, and
that's that same bloody bottle, isn't it? You've just frozen the bastard.
Mate, good to see you. Hey, there you go, Bob, mate. Andy and I got the fancy alcohol today. Good to see you, buddy, and a few people jumping on, mate, already, which is great to see. We were just chatting off air for a bit, lost track of time, folks. So thanks for being patient and hanging out, waiting for the afternoon. Stephen's already got his glass of wine by the look of it. Allison's there. Good to see you guys. Mate, what's been going on this week, folks? Before we kick off, we might as well do the quick intros. I mean, most of you guys know this stuff, but if anyone's new, give us a shout out in the chat. Yeah, let us know. Say hello. Tell us where you're dialing in from. But
tell us how beautiful Jason is, because he gets a couple of those comments. You guys mightn't always see these ones come through, but there's a particular variety of people that
every now and then,
towards the Witten.
There's Fiona. G'day, Fiona, and Michelle. Good to see you guys. There we go, team gang. We're in the mix. But how the show usually runs, Wealth, Wine, and Wisdom. Welcome to the show. Andy and I kicked this off many months ago.
It's been a record run.
It's been a record run.
Yeah.
2 years now on the run. Friday afternoon, trying to make sense of the COVID world, but it's been great to connect with you guys, business owners, property investors, investors in general, and try and make sense of what's going on out there in the world of media and the marketplace, from the world of property and the world of finance and financial planning. Along the way, hopefully we've been helping people make a little bit of sense of things. And we do that in three ways, Andy. What's in the news? Always try and sort of see what's been going on. Some interesting things this week, as always. And sometimes we try and teach things, which is things we reckon you should know. These are opinion pieces, obviously, allegedly, or this is not financial advice. But and also, if you've got any questions, folks, chuck them in the chat this week. Put them down there somewhere, and we'd love to answer those as we go through today's Wealth, Wine, and Wisdom chat. So we've got a good crew on today, Andy. So welcome, everyone. Awesome to see you guys. But Andy, you were just telling me you had something about what's in the news. You're frozen on me. There you are. You're back.
Oh,
but why don't you kick it off, mate, this week? There's a couple of things you said might be a little bit of fun to chat about, what's in the news or what's going on. But I might throw over to you, mate, and see what it looks like from the world of Andy Fenton and what's happening in the news. Well, Elon's out and about.
Hello, mate. Hello.
We love a bit of Elon.
Sorry, wrong way. Elon.
Other way.
Mate?
Yeah. Hello,
there you go, mate. Well, I thought I'd just touch on a little bit of mass market manipulation and allegedly something that might be criminal that the SEC may or may not pick up on over the next couple of days, weeks. Let's have a look at it. It goes into a bit of a trend that I'm going to chat about a little bit later on in the history of money. We promised everyone last week that we'd chat about the evolution of money over time, given the advent of NFTs and Bitcoins. And NFT, by the way, doesn't stand for no fucking time. It's a non-fungible token for those people.
Fungible. I'm always concerned about the fungible bit, actually, to do with fungus and mushrooms. But anyway, we won't go there, Andy. But anyway,
it's the psilocybin token.
Yes.
But, so, mate, this was something, and I've coined this now several times, and we spoke about it last week in regards to the crypto world of Shiba bouncing up and down. And so Elon Musk, I love Musk. It's a great candy. It's a great candy. One of my favorite candies, actually, Musk candy from when I was young. Beautiful little sherbety taste, pink, beautiful. Elon Musk is another acquired taste who's reached superstardom over time for the advance of Tesla, the amazing vision of connecting the world via cars, quite legitimately, that then goes into the grid of energy, and now connecting the world not just via cars and energy, but
internet.
Internet
Starlink.
through stars. Starlink, which is now available in Australia. The down is good, the up is shit, but it will improve, and I reckon this guy will do it. The thing that I want to touch on here, because I think it's a theme, and it's a theme that's going to keep on getting stronger in the currency world of Ethereum, Bitcoin, and all of these sorts of things. And we chatted about it last week, was the mass market manipulation of the people who can play in that space. I'm not sure if you heard it, Jace, earlier on this week, Musk tweeted something. Did you hear what he tweeted?
He tweeted, didn't he tweet, should he sell some of his shares to pay some taxes? Wasn't that the tweet?
100%. Now, do you reckon a bloke who is as smart as Elon Musk just drops that tweet and just asks the general public going, I'd probably pay them about $1 million a year, but I don't trust them. So I just want to find out what my Twitter followers think as to what the right taxation move is with my stock. Right. So I'm interested to see when Elon gets pulled in front of the SEC again, which is no doubt going to happen. It's got to happen, right? If they don't pull him up for this.
Yeah.
I mean, for God's sake. So anyway, Elon, bang in, said, should I dump the stock? People dumped the stock. Tesla went for a wild ride. And so, well, what is the headline here? Well, I'm not even sure if this relates to the headline. I just saw him going like that, and I went, goodbye record profits. That's what I saw. Goodbye record profits. And hello, a new point to buy in and manipulate. Well, richest person has disposed of more than $4.5 million of shares in the electric car maker so far this week. So, right. So clearly, Elon is taking advice from the Twitter followers. So Twitter's shares probably went up at that point in time, and probably sent Elon a tax invoice for tax advice based on this. But this is I know I'm being a little bit tongue in cheek here. Couple of things, Jace. About a year and a half ago on Wine and Wisdom, we both said when electric cars starts to become more mainstream, we're going to see Benetton, we're going to see all of the Formula One cars come in there. We're going to see Porsche, we're going to see Mercedes, and a lot of these companies are actually owned by the same people, right? Daimler, which is Mercedes-Benz, which owns several brands out there, not only high end. But we said that this could potentially provide a real headwind for Tesla getting the market share, because got a massive amount of market research. So my question is one of two. Is it a billionaire playing with the billions who are out there, just seeing whether he can manipulate markets? Because you've got to be asking yourself the question now, is Elon just out there trying to make profit for people that he knows, or is he trying to manipulate markets that he knows that he can manipulate? Or is he just a little bit eccentric and just trying to play the system on a break? I don't know what the answer is, but clearly this guy can manipulate stock better than Rene Rivkin. He can manipulate Bitcoin.
Who's in jail now, or actually passed away, isn't he? Yeah, anyway, he went to jail and then passed away. Anyway, yeah, keep going, Andy, sorry.
Well, there we go. I don't think that's Elon's journey.
No.
But or is he just a mass market manipulator who is another example of why the crypto world is such a boom and bust type of a place? Anyway, I just thought it was an incredible thing to talk about on a Friday, just to show people that the world of manipulation is rife. I don't know his intentions. I don't know him personally. Love to. Elon, if you're listening, reach out. I'm just here.
Reach out. If you behave yourself, we'll bring you on as a guest on Wine and Wisdom, maybe.
Maybe you can tell us about Dogecoin.
If you're going to do It's an interesting one, Andy, because I like this concept because you and I have chatted about the world of digital. Like, what are we doing now? This wouldn't have been possible, I don't know, 5, 10 years ago. Like you and I debriefing the week and chatting with people probably all over Australia right now and potentially the world as well, in this manner.
Well, Brandon was definitely from another country, mate. He was arguably one of our more controversial commentators. Quite often gets banned from the chat feed. He may
Yes.
not have even been of this world, so mate, we might be interstellar.
Interstellar. You never, you never know. But it's an interesting one because there's a very big conference every year. It's held in Europe, not Stockholm. I'm struggling to remember the city. Quite a European city, Eastern European. Every year, where the big venture capitalists arrive, all of the new technology arrives, and they all spend a week sort of hanging out and talking about new tech. And it's a 5-day conference. Trillions of dollars gets invested, over a weekend. And the number one speaker came out at that tech conference, Andy, and said, and the opening line, and I wish I would have kept it the other day. Actually, I should have saved this one. The opening line was, Mark Zuckerberg and Facebook has broken the law 7 different times, and somebody has to go to jail, right? So it's an interesting thing.
Jesus Christ. I'm pretty sure they said the same thing on Sky News about Dan Andrews and Victoria. Allegedly. Well,
Allegedly.
maybe allegedly. But sorry, Jace, you were saying.
Yeah. Well, isn't this interesting right now? Like, so this space, Elon tweeting and manipulating shares, outside of the rules, right? It's fairly blatant, the idea of, let's say Donald Trump, love him, hate him, whatever, winning an election through, Twitter and the Twitterverse, Facebook, and whatever version of the world, political, vax, non-vax, whatever it is, able to, Andy, manipulate the world and its stuff, and sort of linking this to our financial space, right? So, Andy, you and I have talked about, literally for 20 years, you and I have known that our number one risk is nothing but politicians. Like they can be maniacs.
Yep.
Yeah, they can be maniacs, and we all know that in whatever way they are, right?
They've always been maniacs. They've either been conservative maniacs, or they've been right-wing maniacs, or they've been Tea Party maniacs. Like that. That's it. The nature of politics.
Yeah, and so that as a wealth creator, as an advisor, as people sort of investing, we're like, all right, well, where's our risk lie? And but now, Andy, like, where does our risk lie? Like, Elon can send a tweet and fucking our shares go down or up, right? Or so it's an interesting time in this space as advisors, investors, because we kind of thought, oh, we had the hang of this thing. Well, not necessarily the hang of it, but a little bit of a lay of the land. And now comes in some real sort of 3D, 4D kind of, dimensions on this thing where you're kind of like, holy shiver me timbers,
100%. I reckon that Michelle's hit the money there, mate, in that the lines are getting very, very blurred, and they're getting blurred at a rate of knots that we haven't seen before.
Yeah. So as investors, we got to keep an eye on this. Like, that's why Andy and I like to, debrief weekly, because, folks, for you and me, basically at the end of the day, we want to sort of foster and grow our wealth in the chosen asset classes that we're investing in. And we need to be aware of the things can influence the values going up or down, sideways, or, whatever it might be. And understanding that old Elon here, I'm a big fan of Elon. I like him. I think he's
love him.
Yeah.
And I might have been taking the piss. But it'll link back later on that I actually think that what he's doing is potentially a good thing. And that I know that flies in the face of what I'm saying, but I think that he's going to bust a mechanism that's been in place for a long time, Jace.
renewal, Andy. And that could be the theme of like our financial situations for a lot of people, right? What's going on? What else is happening, Andy, over in your neck of the woods?
But well, this is the other one, which is a little bit of a hand grenade that has been tossed over the fence in the real estate and stock market world. And I just thought this is interesting. I thought this is actually not the most world's balanced article, but financial markets are probably not focused enough on the fact that Australian banks unilaterally lifting mortgage rates has huge consequences. Well, on Wine and Wisdom, I think we talked about this last week, which was so they must have been listening, Jace, because they only published this 53 minutes ago.
They've tuned in a few times. Yep.
Raising rates might sideline the RBA. And I thought that's the headline there. Why banks? I thought this is actually the headline, right? And this is, Jace, I reckon, fair income, the first time where I would say banks potentially, while self-serving, maybe acting in the interests of the greater productivity of the economy. But let's understand that it's self-serving first, of course, and that the reason why companies exist, ladies and gentlemen, and this is legitimate. I'm not taking the mickey by any stretch of the imagination. It's built into most constitutions. Is that the director's responsibility of a company is to make profit for the shareholders. 100%. That's it's part of our Corporations Act, and then part of the constitutions of companies that are set up. Best interest of the shareholders.
It's baked in right from the outset. Yep.
From the outset. So here's a little bit of an interesting, and this actually goes conceptually. The article doesn't try and do this, but conceptually, this actually quietens down a little bit of maybe the hysteria that's being pushed around about raising interest rates, housing is going to go to record lows, all of that sort of bullshit, that fear mongering.
Yeah.
But the fact that banks have kind of gone and have predicted that interest rates are going to rise in the future, and we talked about that last week. If you want to listen, go back, listen to last week's on the podcast. We talked about medium-term interest rates. But the banks are basically going, okay, we believe that interest rates are going up in the 3 to 5 year zone.
No, yeah.
So we're going to lift fixed rates. Now, the unintended effect of that, which I'm sure most people didn't predict, and to be fair, Jace, I never even thought of, is that that actually has a stabilizing effect for the Reserve Bank of Australia, where the Reserve Bank goes, well, if you guys are going to profit a little bit by doing this and go a little bit early, like you will, because you want to profit from it, because that's the reason that you exist. We could say scumbags, but we're not going to. The reason that you exist, they could potentially taper the Reserve Bank's immediate need and actually provide them an out for making early decisions. And mate, I really think this is actually quite a profound, and this is buried, like this article isn't a frontline article, but I actually think that this is quite profound in the potential impact of it, because banks can raise their rates a little bit, increase their profits a lot, and the Reserve Bank of Australia doesn't need to do anything.
The heat's off them. The heat's off them to be in charge. Yeah.
Correct.
Yeah.
And I actually like the concept of this. For the first time in a little while, I'm saying something quite positive about the articles that are written. I actually like the concept of this a little bit, because yes, okay, the banks are going to win, but the banks have to win. That's a reality. They're not winning ridiculously. The Reserve Bank of Australia is not reacting in a split personality type of a way, where they're like, oh, it's doomsday or it's boom day. They're being very moderate in their approach, which has quite a stabilizing effect, which I feel is actually very, very, very good.
Well, it's an interesting one.
Very good for the economy.
Yeah, well, mate, and you and I have chatted about this a number of times. Okay, post the GFC, after the GFC, the global financial crisis, the world crisis, the worst crisis the world's ever seen, the idea that the RBA and the interest rates, or the cash rate and the interest rates, decoupled, right? The RBA would make a decision, and the banks actually would do their own thing. That's been happening for a while, right? And right now, it's nothing new. It's coming through, which, and again, it's a positive, Andy. You know, whether you like it or not, folks, you have to have a healthy banking system for your economy to be trusted by its citizens and the world, right? Now, that's where we are today. Now, Andy, you and I have chatted about quite in depth, and not on Wealth, Wine and Wisdom to this depth, but, you know, if the crypto world changes the banking system, the stability of the banking system, you know, what then? You know, but that's kind of like, you know, down the rabbit hole with Alice in Wonderland and the Tea Party. But, you know, but that's not here yet. But I think it's coming. You and I have chatted about, you know, it's probably a decade away, maybe 20 years away, but, you know, there's a change coming. What does it look like? But right now, if we have healthy banks that have, okay, call it healthy profits, it's probably a bit more taking the piss than you'd like, but, you know, good profits, that's actually good for our economy. That's good for our citizens. It's good for our confidence. And it's by, like you're saying, it takes the heat off the RBA, and it takes the heat off governments and stuff, to be honest, doesn't it? Really, at the end of the day, you know, it encourages overseas investment. It actually helps with our actual dollar. You know, the Aussie dollar is stronger, all sorts of stuff. You know, get some positives from it, is what you're saying, right?
Yeah, and I believe that this is a stabilizing factor, a real stabilizing factor. That because if the Reserve Bank raises cash rates, then it has it's a tidal wave type of effect. And it also is a tidal wave type of effect in the fact that it says more is coming. There's a presupposition that more is coming, even if there's no intention. This is quite legitimately one that I didn't expect. Like, I didn't think through to go, well, yeah, bank raising interest rates might actually give the RBA a little bit more time to sit back and think, mostly because it hasn't happened in the rest of the world. Right. And so here's an interesting concept, Jace, is the rest of the world's banks kind of sat there and went, nah, we won't do it to them. But in Australia, we went, yep, we'll do it to them.
Well, you know, Aussies like to be a bit different, don't we? I mean, you know, just we're a bit. Well,
I'm conflicted, Jace, because I don't know whether it's a good or a bad thing right about now. I just know that it's a thing.
Yeah, it is a thing. It is a thing. For me, in the real estate world, I'm actually quite a fan of it being a little bit more expensive to borrow money, and only because it settles the speed down at which the market travels.
Yes.
And like, I personally think when those markets travel at too much of a speed, you know, it's actually very yeah, it's dangerous for people to be involved. You know,
people get hurt. Yeah.
Yeah, absolutely. Absolutely. I've always liked real estate because it traveled slow. And, you know, in the past 12, 18 months, 2 years, gee, it's been traveling a breakneck speed. It was like, oh, how can I keep up? It's crazy. But, you know, it's quite a unique time, obviously. But, you know, I just go back to Andy to saying, you know, if we want some confidence in our economy and we want some confidence in our system, you know, the banks have got to be profitable. Whether that profit is more than it should be, you know, that's not for today's conversation. But, you know, at the end of the day,
right, we can always invest in them. It's a free market.
Totally.
And
yeah,
free market is people can take opportunity where they see them. And you can participate in the profits purely by owning a bit of the banks.
100%. And, you know, it's an interesting one in that space, isn't it? Because that is the thing. Like, you get a choice, whether we feel like we don't, in that free market space. You know, I'm a big fan of capitalism. I you know, now I haven't lived through any other regime, so I don't know from personal experience, but, you know, any of my research economically, has shown capitalism wins out most times, Andy. Even though it's quite dysfunctional in some of the aspects, I think it does allow us to have that kind of, well, you get a choice, you can play or you don't have to play if you don't want to. But
some of the first great examples of democracy ended up with a knife in the back, quite literally, Julius Caesar.
Yeah, exactly. Well, mate, it's great to see that's happening without government intervention. And that's probably your point, really, to be honest. You know what I mean?
Natural markets. We talk about the ecosystem of things.
Yeah.
And the natural symbiosis where things should be able to create their own equilibrium. And I am alluding a little bit to Musk here, and I'm also alluding to a concept that we'll chat about a little bit later on as well. I know I was sort of taking the piss out of it a little bit, but I do believe that there is a new wave coming, and it's going to be faster than regulation. And the reality is that standard Keynesian economics is not going to be able to keep up with it. So we need to start to think different, Steve Jobs. We need to start to see wealth differently, net wealth, just to just coin a couple of catchphrases of a billionaire and a listed company in Australia. And I honestly believe that they're very fundamentally linked, and it is coming very, very soon.
It's coming, and we need to be across it, right?
Mate, while you jump to the wide angle shot, I'm going to turn down the heater, but I have to go over there. So put me small in the screen, and I will be back. But I am absolutely 100% here.
Do that, mate. Well, while you're there, I'm sure you can hear, this is following the theme of the banks. It's interesting. We just pumped the banks up a little bit, and this little article is interesting for me and potentially you folks listening in at home right now. The banks are taking an opportunity under the guise of, let's say, COVID and other things to challenge the status quo of the physical banking world. We were talking about, crypto before and all of those sorts of things. Banks are closing branches and getting rid of ATMs at a rate of knots, as customers prefer to do business online. It's an interesting one, and when Andy sort of steps back, I'll get his spin on it, folks. But right now, tell me, when was the last time any of you guys in the chat, when was the last time any of you guys went to the ATM? Andy, when was the last time you went to the ATM and took some cash out? Right.
2 weeks ago, and they asked me to give my name, my date of birth, a blood test, a urine sample, a reason for the funds.
Well, that's because you live in Victoria, mate. Nothing's
true, before that, Jace, I hadn't been into a bank in, I reckon. Oh no, I lie. 4 times I'd been into a bank in the last 10 years, I reckon. And the 4 times were because they screwed up my mortgage, and I had to go in there because I got the mortgage without going into a bank, but they had to finally prove who I was in order to get a better deal.
Yeah. I mean, there's Alicia, like 10 years ago, like this is my wallet, folks. Like I don't carry cash around. Why would you? What a archaic concept, right? It's crazy. It's interesting. But right now, banks are noticing, hey, Alison gets her cash out of Coles. Yeah, exactly. If you need a bit of cash for whatever reason, happy days. It's electronic. Most of us, and especially in the last 2 years, Andy, have been socialized to do everything we need to do online. Cash is antique. Jeanette's right onto it. Andy, I don't know if you noticed, I probably should have put this one tonight.
Store a couple of dollar coins away for now because they might be worth $2 in the future.
You know what? I've got some $2 notes from a long time ago, Andy.
You're not that young, are you?
Yeah,
Jesus.
I am. Well, actually, my dad kept them, but I've got them. There you go.
Wow.
Yeah. Yeah, there you go. Ashley saying if you go to a bank to close a credit card, they give you a number to call.
Ashley, that's purely because I don't want you to close the credit card.
That's true. That's true. Yeah, it's the old credit card. But you know, we are
totally
in this.
different scam.
We are in this transition, man. Like we are in this transition, folks, of physical to digital, and it's actually happened. Like it's happened so much faster than everyone expected, right? You know, right now, for the first time in my 20-year life, Andy, as a business owner for Positive, we do not have an office in Sydney. We had a head office in Sydney, North Sydney, for 20 years. You know,
You know why they call them head office, Jace?
tell me.
Because they're full of dicks. Yep. That's fundamentally true. I can tell
Well,
you
there
that
you go.
from working in banking all around the world. The head office is always full of a bunch of dicks. It's terrible.
Full of dicks. I mean, that goes with Alison's joke about you have to tip the strippers in Bitcoin suit instead of notes. There you go. You know, and you know, Bryce says, "Oh, you can't probably take out with some cash." Hey, Bryce, have you heard of Uber, brother? Like, I literally, like, folks, I've spent so much money on Uber, Uber Eats. It's insanely ridiculous. It is like for for a parent, like it's been brilliant to be have Uber, a driver, an Uber driver, and Uber Eats, busy, you know, 3 kids, business stuff going on. You know, it's an interesting time, Andy. You know?
Can I warn you, business owners out there? Let me give you a warning because I just got my own bloody and I teach this stuff. Mate, I was on the phone to my bookkeeper. She's gone, Andy, your drawings are exceedingly large at the moment. And I'm like, drawings? I don't take any drawings. I manage my shit exactly the way I need to manage it. Because I've got a lot of subscription on my Apple device for work. The bloody thing is cross-contaminated into Uber Eats. And the next thing you know, every second Saturday meal or something like that is going on there. And the next thing you know, it's just blowing out. And I was looking at it, I was like, holy smoke. So business owners out there, just watch where your iTunes account is because you may end up with some unexpected surprises. I certainly did. I was like, geez, that was an expensive steak.
Mate, I tell you. Well, you know, there's an interesting one. The physical world changing, Andy, to Twitter, you know, to whatever it is. It's well underway. Whether you realize it or not, it's here, and it's here to stay. And you know, Bryce, hopefully, you get better. You get better Uber where you are, mate. And if Uber doesn't do it, those drones are coming. We talked about those. Like
they deliver chickens at the moment.
Yeah,
they deliver hot
Uber chicken delivery drone, and it's a real thing, folks. It's not a joke. Look it up. Canberra and Logan. Canberra and Logan are 2 places where Uber. It's not Uber, but it's drone delivery of food on demand. Has been tested this year. So crazy times. But
you can order a hot chicken. Unbelievable. Absolutely. I reckon it's just to take the piss out of all the chickens that can't fly.
Lands in your driveway. But you know what, Andy, it's interesting, you know, in the you and I have talked about this before, you know, in the same breath of like record prices going up, you know, literally 1 minute later, you know, the finance, or not the finance, the media world talking about other financial things, you know, home prices dropping across whatever. You know, it's an interesting conversation about premium suburbs.
Zoom that in for me, mate. Let me be able to read that headline. Home values have dropped 7% of suburbs during the past 3 months, up to 1.4% during the March quarter amid listings credit tightening. Mate, I'm going to call bullshit.
It's complete. It's complete and utter bullshit. And I did this one the other day with folks, and just
how the fuck do they know, Jason? How do they know? It's because maybe they can quantify more listings. I'd be interested to know what the article has to say there. Credit tightening and poor affordability. How do they? Well, has there been credit tightening? Jason, interest rates going up doesn't necessarily mean that there's a fixed rates going up doesn't mean that there's credit tightening. And poor affordability, I think it's just a sensationalist headline. But
100% a sensationalist headline. It's a bunch of bullshit. Andy and I chatted to everyone the other day about the idea that, you know, folks, when you see
Premium
these things,
suburbs are amongst the weakest markets. That's the subheading. Premium,
yeah.
but don't you have premium salaries in premium markets, which are less susceptible to these things? To me, this is a juxtaposition of.
Well, it's about kind of like not taking these things on face value, right? It's just like, you and I talk about this all the time. It's interesting to see what's going on. We read a few articles, we kind of get a feel, like get a vibe, but don't don't eat the bullshit. You just got to have you might just have a smell, but you don't consume it, right? Because folks, this is the sort of thing that can be extremely misleading. I mean, reality is, Andy, if your property price, your premium property has gone up $1 million, why would you sell? Like, tell me right now. Like, you're like, no, oh, bloody hell, I'm not selling that thing. I've had 8 phone calls in the last 2 weeks from agents in my local area, and they're like, we can sell your property for a great price. I'm like, I don't care. I'm not selling. The challenge is the data doesn't represent what's going on. It only represents the people who want to sell and or are going to market, right? And maybe the shit properties are going to market and the good ones aren't. So
apart from Bryce's comment, which I think is hysterical, the last 4 conversations I've had around property have been at one today, who's somebody who's listening. Commercial property went from 2.5 to 6.5 million, or it might have been, let's just be conservative, let's say 3.5 to 6.5 million, so doubled in a very short period of time.
Yeah.
And residential property crushed it. And the questions being to me is and I've rightly said I don't know. I'll give it to Jason because I don't know. I've been wrong about this because fundamentally it doesn't make sense to me. But the question's been, how do I continue to participate in that? And has it seen the end of it, or is there's still a lot to play? And I keep going back to what I see in my world, and legitimately in my world, the answer is I don't know. But I do know that they've injected trillions of dollars into the globe, domestically and internationally, and it doesn't. Let me step back a bit. Keynesian economics, which is most of the economic theory that justifies a lot of these articles and portfolio theorem and most of what you'll chat with your advisors about. But that was written by Markowitz, who is a long time dead. Like when I say a long time
100
dead,
years, isn't it, Andy? What is it, 1908 or something? I mean, this is ancient.
There's a few generations, and his was just a mathematical theory that then got applied to financial markets. But the big question for me is, and I like to think of it as water on a board, which has barriers around it and it has a landscape around it. And water will eventually find its natural flat spot in amongst all of the geography. And at the moment, I go, the world's geography has had trillions of dollars pumped into it, right? Trillions of dollars pumped into it, which in an investable sense is maybe a quarter more. And I haven't done the analysis, but maybe a quarter more. So you've got a bathtub which has terrain around it. You've had an earthquake, somebody's shifting and shaking it around. There's multiple people in your bath, and there's a sick image, right? Maybe it's a bathtub.
Where are you going, Andy?
I don't know. Save me, Jason, is the comment here. But hopefully you can visualize the image of multiple peaks and troughs, multiple mountain ranges within a landscape, and there's more water being poured in. And while that's shifting and baking like this, it's hard to see where the true waterline is going to rest.
Yeah.
And I think that everyone can guess. I don't think anybody really knows. I think that's where we're trying to bathroom trade wars, Ashley. Oh, I love it, Ashley. But that's what we're trying to guess in markets at the moment. And but my belief is that we're still in the shaking and baking territory of this. Is that there's a lot of money that's been pumped in, which you would believe that the watermark is going to be higher than what it was before. And in real estate, it's gone higher, but we've got lower interest rate. But we've also got a lot of other headwinds which were pushing it in that direction anyway. And in financial markets, we were probably pressed, to be fair. We were probably pressed at about 6,800 on the ASX. We were probably pressed. But then you drop interest rates to zero for the banks and related companies at the top, and then you pour $1 trillion in on the top end. Well, it's like, mate, where this is going to finish is kind of anybody's game, and it's going to break what would normally be rational, is my thought.
Well, it's interesting. You've busted this conversation open a few times, Andy. Like if money, if we remove the friction from money that I've got to the marketplace, if we remove the middle people, the middlemen, the trade, like those in the middle, and we don't need margin on margin on margin on margin on margin, where does it sit, right? Yep. Oh, what's going on here, right? And that's the conversation probably into the future, man. Is like, where do we sit? What does it look like? Andy's in, he's out, he's in, he's out.
I've got a technology glitch that I was messing around because I thought I was in control and you're in control. I'll fix up my lack of control.
You need to be higher on the scale here. So it totally is interesting in that space. Where are we in that mechanism for the evolution of money, right? Because you've talked about it a ton, and I think it makes so much sense. The speed at which we could connect, and folks, talk about Uber, the taxi world, right? Where is a piece of inventory? Where is an asset or a piece of inventory sitting physically in the physical world, and how can we deploy it? Redeploy it somewhere else, e.g. Uber. I've got a car sitting at home. Maybe instead of taxis, maybe I could just drive someone around and they could pay me $1. Technology's now facilitating that, Andy, right? So in the olden days, and I'm sure, hopefully I'm setting this conversation up about the evolution of money. How could Jason Witten here, sitting here, connect with someone like Andy Fenton? Andy's got some investors. Jason's got some money. How does Jason connect with Andy? Far out. That was clunky and old and geographically hard, but now it's instant. And where are we at? And what does that look like as we travel into the future? I think physical real estate will always have its place, but I think there's some disruption coming when it comes to lending and the speed of lending in and around physical real estate, and what physical real estate will be needed for, Andy. But money's got some evolving to do, and it's happening. It's literally happening now, right? We're in what are we in? It's an exciting moment in time where, we went from, farming with picks and shovels to machinery, we're kind of in that 20 or 30 year transition now for money, right?
100%. And it is evolving by the second, and going to change rapidly. And the speed of change is going to be quite incredible. I've just got my Uber delivery has just come in a little bit earlier than expected. But if you can Uber deliver a glass of wine, that would be even better.
Mate, I just got a text about my Uber pizza coming right now.
But and maybe we'll start off next Wine and Wisdom in and around this. But it makes a lot of sense when you look over the history of things. And if one thing is true, I think we can all believe it. And Unicon, I do actually want to give credit to these people. So you can't quite see it, and I can't quite get you to be able to see it on this, but Unocoin.
Yeah, there you go.
There you go. That's the proprietor of this graph, and it's an interesting article, I think, that people should read. But here's the reality of it. This is great, right? So initially there was a barter system, and the barter system was a subjective ledger. And when we say a ledger in financial markets or in wealth, we go, well, if it's going to positively impact on my life, how much positively is that going to do? And what is my potential of positive growth on this? And how much am I going to spend? And it's the negative ledger is then going, well, what could I lose? So the barter system was always a subjective ledger. And that was well before most of us were born. But quite often, when we go to Thailand or we go to, some third world nations, we actively engage in the barter system. And in some places around the world, it's expected for you to engage in the barter system, where you can't pay full price. If you go to pay full price, they will literally go, no, we've got to exchange. We start here and we end up somewhere in here, and the real price is around about here.
And about there, yeah.
And as long as we're a little bit north or south of that, we're happy. So there's a subjective mental ledger of what you think it's worth. But here's it. If you're starving and drained, then a small quart of water is going to be worth extraordinary amounts of money. Pay $1,000 just for a liter of water right now because I'm exhausted. What did I order? I don't know. My mushroom pizza. So it's subjective. So the seller may not have the same value as the buyer, and the buyer may not have the same value as the seller. And so there is manipulation that can happen based on the seller knowing the buyer knowing the seller, so on and so forth. So there's fluctuation in price anomaly. We then cross the border into going, well, now there's apparently, and this was roughly around when the spice trade started to come to fruition. Ships started sailing around from Europe around to Africa and to northern South America, and there was this spice trade route that was established. And so there was a physical objects ledger, and so physical objects could have been pepper, it could have been turmeric, it could have been gold, silver, these sorts of things. And so then these started to become a bit of a universal ledger, because as they were traded more commonly across different places, because Africa would go, well, I gave 7 nails for that little bit of turmeric, and the other place would go, well, I only gave my 3 firstborn for that, and you go, well, hang on, that's out of equilibrium.
So is that where gold become a standard? Like, gold was better than silver, better than bronze, better than kind of I change my eggs for some milk, right?
So there became a ledger, a universal ledger of what something was worth but this took centuries.
What are we talking? Yeah, we're talking, thousands of years, right? Like
we're talking Christopher Columbus until less than 500 years ago.
Yeah.
So during this time, things found a natural equilibrium in a ladder, which all of a sudden created a universal ledger of how much something was worth. So people could go, oh, that little token of gold. Well, no, that's worth 10 times that amount of spice. No. So people started to understand the medium of exchange. And then very quickly after that, fiat currency was introduced, which was paper currency, which started off as melted down bits of gold and brass and copper. Like the currency started, for those of you who are listening to the first time, so currency started as literally melted down goods. So that
melted down what? Silver, copper, and gold or something. Like,
yep. And
well,
zinc and
yeah,
any precious metal, they melted it down and its weight held its weight in value.
there
And
you go.
eventually they turned that into a coin. And there was still fluctuations in value of zinc and stuff like that. Then eventually it sat as a currency. And it's like, well, now this has a determined value, right? Within this community. Had a determined value within this community. So in Australia, a dollar is a dollar, and a dollar will buy you whatever, right? So that's the fiat currency. And then yours and my generation has been in here, Jason, around the online banking system where we stopped having physical currency and it was starting to become more and more tap and go, and you have a bit more cash, and then you can pay for some things in cash and avoid stamp duty. Not that I'd do that, Jace. I don't know anybody who would do that. I certainly don't do that. Never have done that. But I know that it happens, but just never happened around here.
Allegedly.
Allegedly, it happens. And so there's this medium of exchange, which is physical, and now it goes into a digital world. And the digital world up until now has been moderately regulated. And as we've gone through all of these cycles up to this digital representation, they have all been what I'd call, Jace, a free market trade. Because right back here, what is it worth to me? And that's subjective.
Yeah.
All right, then you have a physical ledger, which is universal, but it's still, well, how much of this universal thing am I willing to pay for that? And that's still a free market kind of trade.
Yeah,
Well, no,
that's
I'm
where the
not
free market kind of gives it its kind of value. Like if there's one person, that's very subjective, but if there's 100,000 people, you find a medium, right?
100%.
Yeah.
And then we got into this world, which is, I'm not paying that for a bloody Mercedes Benz. I'm going to get a Ford because the technology is just as good.
Yes.
And so we start to become more discerning in our consumerism. But we have reached, in my perception, we've reached a peak where all of a sudden the rules, regulations, the transparency have actually reached, and especially from a governance perspective, with taxes on cars, taxes on petrol, taxes on cigarettes, taxes on alcohol, taxes on fucking everything that you can possibly think about.
Yes.
There's been enough controlled regulation where the regulation has gone, you know what, enough control. Free market needs to reign again. There's been too much manipulation on the online sector and now how we're allowed to do what we need to do. And the less freedom that we've been able to have with the transition from this fiat into the digital, because the digital, in my view, is just a transitional into corporate tokens, Bitcoin, decentralized monetization. It's my view has been right from back here. What's the biggest difference between there? Oh, sorry, and there. My belief is
utility in Bitcoin. Yep.
Is the speed of which things can happen.
Yeah, and like the capacity worldwide, right? The utility system was so localized it wasn't funny. That was kind of one to one, right?
But it's still subjective.
100%. And Bitcoin's still subjective right now, isn't it? Right. But it's one to everyone in the world who's actually connected, like digitally. Now, there's plenty of people who aren't digitally connected, right? But it's the scale, the subjective scale right now is the volatility of it. Is that kind of my, the interpretation of where you're at? Like the subjective scale of someone, let's say in England, Vietnam, Poland, and New Zealand of the value of Bitcoin and where we're at and the safety of it,
Well, I would say from this part here until this part here, this is the world of regulation.
Yes.
Where all of a sudden people started to protect things, countries, so on and so forth. And a lot of that is right to protect it. But as we know, they push too far one way or another, and they stop it from being a free market, and now it's a highly regulated market. And I believe in Australia, we've gotten to a point where it's way too highly regulated. And finance is not a closed system. Finance is always going to be an ecosystem.
Yeah.
You dive down into the ocean and you get to the ocean's floor, and it's never the ocean's floor. You can always go deeper. But down there, nature will find a way. And I believe that the finance system is no different. We started with a barter system, which is whereby we had a subjective ledger of what we believe things are worth at a point in time. And then we went into a period of time where all of a sudden it started to become more regulated, where a couple of nails were worth a couple of bullets and a couple of bullets worth this. And it was still a subjective ledger, but it was on a universal ledger. Now we're moving out of the first advanced stage where people are going, well, I don't actually care what you value anymore. I actually value something completely differently, and I want to be able to trade based on my values. And this is where this whole idea of decentralized money came from. Decentralized system,
control. Yeah, decentralized system, right? Yeah, the
which
powers
is
in
to me
the hands
is just
of the many.
a big loop of exactly where we've come from the beginning. Because then, what do you do with your decentralized money, Jason? What do you do with when you got $1 billion worth of Ethereum? What do you do with it?
Yeah, like how do you transfer that into the practical world, the physical world? You've got to have a mechanism, right?
Correct. And you've got a mental acuity based on what is that worth.
Yeah.
And then you will deploy that back into those asset classes based on that fundamental barter system of that mental accounting, which has a subjective ledger. And as we go into these times of, and I know this is quite wacky, especially if you've joined into Wine and Wisdom for the first time, but I've been pondering this for some time now. When you look at Elon Musk, when you look at and his ability to manipulate not just now an S&P 500 stock. Now that's what it is, and this dude just went out and said, "What do you reckon I should do? Should I sell 10% to pay my tax bill?" And manipulated the share price. Talked about Dogecoin, talked about Ethereum, talked about Bitcoin, manipulated all of them, whether he intends to or not. Like that's not my thing. But the comment did manipulate the price. That's almost for granted. We're moving into a new world whereby the subjective ledger is back in play. And that's my whole point here, is that we are closer to the barter system than we have been for centuries. Literally centuries. And this new NFT, Ethereum, Bitcoin, all of these sorts of things go back to a subjective ledger. And the subjective ledger is, Jace, you might go, this Bitcoin bullshit, it's all garbage. It's all rubbish and it costs a lot of energy. That's your subjective ledger. And there's a bloke next to you who goes, I reckon this stuff is going sky high, Jace. I reckon this is going to $1 million a Bitcoin. And
true.
The exchange on the platform is either gambling or a subjective position on what that is really worth, what your time and energy is really worth based on where you believe that's going. And that's no different back in the day when somebody had a nail and a screw and they went, you know what, I reckon nails are going further than screws. So I'm going to back nails every day of the week.
There you go. Well, mate, I think that's a nice way to put a pin in this week's Wealth, Wine and Wisdom. You know, folks, are you backing a screw or are you backing a nail? Because you know it is fascinating, isn't it? You know, you say it all the time, brother. You know, history is a great mimic. It doesn't repeat itself exactly, but it does mimic. And we're doing the roundabout again. It's just the version of the world this time. You know, it's the pace, it's the speed. It's not Murphy's law. I can't remember what the law is, but Moore's law. That's right. You know, doubling every 7 to 10 cycles or whatever it is. All right. All right, mate, you've got my brain whirring right now. I love that chart. It was a goodie. It's certainly worth pondering some more. I might nick it off you, actually.
Crypto the future.
Crypto the future. Well, there you go, mate. Well, Mate, let's put a pin in that one. Good to see everyone online. We didn't get around to questions this week, but there was plenty going on. But I think Bob asked us a question about, Andy, are we concerned about inflation? And I would say the short answer is no. I would say the long answer is no, but the short answer is yes in the short. But why don't we put a pin in that one for next week, Andy? Because inflation's a funny old thing, isn't it? When it comes to the world of finance and money and investing. And sometimes it's actually working in your favor, folks. Real estate, it's actually working in our favor at the moment. Whether it maintains in that direction is one of those things that we've got to be, cognizant of, Andy. So, maybe that's a good conversation for next week. What are your thoughts?
I reckon it is, mate. Inflation is one of those things. It's either oxygen, which will sink a balloon, it's helium that'll rise a balloon, but either which way, the balloon is still getting inflated, and so it's the perspective.
But you're full of good. Anyway, I won't say that. All
right. Well, it's an empty glass from me.
Mate, it's an empty glass from me. So it's a good night from him. And it's
a good night from me.
Good night, folks. Have a good one. Cheers, mate. Bye-bye.